Hello, and you're welcome to Global Business Insights, where we go deeper into the main global business stories. Today, the Japanese government released revised gross domestic product figures that showed the country's economy shrank 1.8% in Q1, better than the 2% contraction initially reported in May. It's a big week on the macroeconomic and monetary policy fronts, with US May inflation on Wednesday and an interest rate decision by the Federal Reserve. That's tomorrow and Wednesday when they meet. Focusing on the summary of economic projections this time, though no revision to rates in the horizon. On Friday, the University of Michigan releases its Consumer Sentiment Index for June. The expectation is for a 73 reading, about 4 points more than previously. In May, consumers' expectations for inflation in the year ahead was 3.3%. That was the highest level in 6 months. Also, the Bank of Japan's rate decision is on Friday, while China and India's inflation numbers for May will be released also early on Wednesday. UK unemployment data comes out tomorrow. And in Nigeria, we get inflation data also at the end of the week. In Europe, the euro fell against the dollar as far-right parties made gains in the European Union elections, performing well in Germany and comfortably winning the vote in France, prompting Emmanuel Macron to call a snap parliamentary election. We have seen a wave of anti-incumbency hitting the UK, India, and South Africa as voters move to the center and far right in Europe. But it's different country by country, driven by strong discontent and voters simply wanting something different, raising uncertainty on shifts in regulations and fiscal strategy, as well as how they intend to de-risk from China. That's in Europe. The same tone on anti-immigration is echoed in the US and the UK as we see this uptick in populism. German Chancellor Olaf Scholz also suffered massive defeats in the European Parliament elections on Sunday, as far-right parties made gains that could lead to a harder line on migration and curb ambitious actions to protect the climate. Shares of Japanese automakers have largely plunged since the country's transport ministry found false data used to certify certain models a week ago. Shares of Japan's largest car maker, Toyota, fell more than 5.4% last week after this data was found, and it will be interesting to see how it fares this week. In the UK, the Financial Conduct Authority is set to approve the biggest overhaul of its listing regime in 40 years. And yesterday we got data from the Nigerian Bureau of Statistics showing a trade surplus of 6.52 trillion naira for the sixth straight quarter. That was Q1 2024, and it's also a 79.1% increase from the previous quarter. But exports continue to be dominated by oil products. What can we expect from the FOMC meeting this week? Currently, one or two cuts are viewed as the most likely scenarios as policymakers update the summary of economic projections. That's the dot plot, also estimating where they see rates at the end of this year. The last update of FOMC's summary of economic projections, that was in March, showed 2 or 3 interest rate cuts forecasted as the most likely outcome for 2024 by policy makers. Definitely this week we'll see a more hawkish slant. Since the FOMC last raised the federal funds rate to its current target range of 5.25% to 5.5% in July, rates have been held steady and inflation has somewhat abated, although higher price pressures, that was in Q1 2024, has pushed back timing for a rate cut. Still, there's a good news in that inflation is not seen to be accelerating. Members of the FOMC also signaled pockets of weakness in the job markets, and there could be a comment expressing concerns on a somewhat less robust jobs market, for example, in non-white demographies. Markets will be watching carefully for signals and tone, especially where rates may be moving later in 2024. Listening for the tone on how the Fed sees the labor market, and though no chance of rate cut, like we said, one expects the Fed could begin setting expectations that interest rates could move lower in September or at least later in 2024. The focus definitely will be on the shifts in signaling and the latest economic projections, and like I also said, changes in tone at the press conference. Nigeria's total merchandise trade stood at 38.8 trillion naira in Q1 2024, up 46.3% from the preceding quarter and up 145.6% from the same period in 2023. The National Bureau of Statistics report shows a positive trade balance of 6.52 trillion for the sixth straight quarter, also in Q1, a 80% increase from the previous quarter. The cheaper naira boosted exports, with crude oil exports still 80% of exports, mainly to France, Spain, and the Netherlands, India, and the US, while the largest category imported was motor spirits, which was 21% of imports, mainly from China. Nigeria has a significant trade deficit with China of over 1 trillion naira, 2.93 trillion imported, with exports under 1 trillion naira, not anywhere in the top 5 export destinations, that is China's. Three things are immediately evident: the need for a better trade balance, especially with countries like China. Second, non-oil exports was about 10% of exports, suggesting there are opportunities to diversify exports, and also non-oil trade within Africa was quite low. Oil exports to Africa was as high as 90%. The main issue remains how to expand non-oil exports and diversify the economy. We can learn from what they're doing in Saudi Arabia, where they're privatizing Saudi Aramco to raise funds from foreign investors for their own very ambitious diversification agenda. There is need to accelerate targeted interventions, especially to micro, small, and medium enterprises, and of course provide investment and policy support for key sectors like agriculture, manufacturing, solid minerals. And there are already planned fiscal interventions that need to be accelerated through development financial institutions to help leverage grants and capital at low interest rates. There is a 100 billion naira proposed for youth-owned enterprises, 200 billion naira proposed for large MSME support, about 1 trillion proposed for supporting manufacturing, with 111 billion naira to expand the Bank of Industry's support of rural economies. Exports-oriented businesses, including non-oil trade, including processed commodities like cashew, cocoa, sesame, sorghum, and ginger, should be given priority, with as much value add locally as can be achieved. Nigeria can also position as an African manufacturing hub. Also, reforms to debottleneck, de-risk, and reduce costs for the exports value chain should be accelerated, including competitiveness reform. In addition, expanding global cooperation, signing trade treaties with countries to open opportunities for more non-oil products exports from Nigeria, especially with countries like China, Europe, and the US, and Latin America, Middle East. Also, the export-oriented agencies should be strengthened to support the export business, and Nigeria can also leverage technical assistance from the World Trade Organization to re-engineer processes to be more competitive and best in class for exports. Also announced as part of efforts to enhance electricity supply, Nigeria reached the final stage of its plan to sell 5 key power plants at a cost of $1.15 billion, with bid winners soon to be announced. And in the UK, the financial watchdog is set to approve the biggest overhaul of the listing rules in 40 years as early as this month, perhaps within weeks of the formation of a new government. The Financial Conduct Authority's board meets this month to decide whether to approve the final version of the rules aimed at boosting London's ailing stock market. The FCA is not expected to make an announcement until after the July 4 election, and precise timing remains unknown. The plans, which relax rules to make it easier for companies to join the London Stock Exchange, and some say this implies a higher risk of more things going wrong, of course. According to the draft rules released for consultation, the FCA could combine the premium and standard listing segments on the exchange, and of course there are risks which would include less scrutiny of corporate transactions such as mergers and acquisitions. Observers warn that encouraging a more diverse range of companies to list in the UK has its implications in terms of higher risk businesses being admitted onto the listings. The competition has become more cutthroat. Countries with fiscal capacity are using generous incentives to attract listings, like in the much sought after new technology sector. Countries that cannot afford their own CHIPS Act are making the rules more relaxed, as the US seems to be gaining more in terms of attracting listings than, say, in Europe, where valuations are also seen as cheap and not as compelling for investors. Apple's Worldwide Developers Conference kicks off today with a keynote speech from CEO Tim Cook, that's in California. Apple is widely expected to outline its strategy around artificial intelligence software at the conference, which runs through Friday. Brent crude still under $80 per barrel this morning in early trade, but slightly up after a weekly drop, with the market still digesting OPEC Plus's decision to restore supply. Also, as traders look ahead to a set of industry reports and the Federal Reserve decision on interest rates. A hawkish tone from the Fed can be bearish for oil prices as higher rates weigh on the economy and energy demand. Still, there are hopes of rising fuel demand, with the summer peak season also driving energy consumption. Financial markets in mainland China, Hong Kong, and Taiwan are closed for the Dragon Boat Festival. Trading in Asia, basically, I would say thin. Nikkei 225 in Japan is, however, up 0.92%. Well, that's it from me on Global Business Insights. This is Bodi Oshasami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Thank you very much for watching. Bye-bye.